The Reserve Bank of India is India's central banking institution, which controls the monetary policy of the Indian Rupee. It was established on April 1, 1935 during the British rule in accordance with the provisions of the Reserve Bank of India Act, 1934. The original share capital was divided into shares of 100 each fully paid, which were initially owned entirely by private shareholders. Following India's independence on August 15, 1947, the RBI was nationalised in the year of 1949. The RBI plays an important part in the development strategy of the Government of India. It is a member bank of the Asian Clearing Union. The general superintendence and direction of the RBI is entrusted with the 21-member Central Board of Directors, the Governor, 4 Deputy Governors, 2 Finance Ministry representatives, 10 government-nominated directors to represent important elements from India's economy, and 4 directors to represent local boards headquartered at Mumbai, Kolkata, Chennai and New Delhi. Each of these local boards consists of 5 members who represent regional interests, as well as the interests of cooperative and indigenous banks. The bank is also active in promoting financial inclusion policy and is a leading member of the Alliance for Financial Inclusion. History, 1935–1950. The Reserve Bank of India was founded on April 1, 1935 to respond to economic troubles after the First World War. RBI was conceptualized as per the guidelines, working style and outlook presented by Dr. Ambedkar as written in his book OE The Problem of the Rupee its Origin and its Solution in front of the Hilton Young Commission. The bank was set up based on the recommendations of the 1926 Royal Commission on Indian Currency and Finance, also known as the Hilton Young Commission. The original choice for the seal of RBI was the West India Company double moire, with the sketch of the lion and palm tree. However, it was decided to replace the lion with the tiger, the national animal of India. The preamble of the RBI describes its basic functions to regulate the issue of bank notes, keep reserves to secure monetary stability in India, and generally to operate the currency and credit system in the best interests of the country. The central office of the RBI initially established in Calcutta, but was permanently moved to Bombay in 1937. The RBI also acted as Burma's central bank, except during the years of the Japanese occupation of Burma, until April 1947, even though Burma seceded from the Indian Union in 1937. After the partition of India in 1947, the bank served as the central bank for Pakistan until June 1948 when the State Bank of Pakistan commenced operations. Though originally set up as a shareholders unregistered trademark bank, the RBI has been fully owned by the Government of India since its nationalisation in 1949. 1950–1960. In the 1950s the Indian government, under its first Prime Minister Jawaharlal Nehru, developed a centrally planned economic policy that focused on the agricultural sector. The administration nationalised commercial banks and established, based on the Banking Companies Act of 1949, a central bank regulation as part of the RBI. Furthermore, the central bank was ordered to support the economic plan with loans. 1960–1969, as a result of bank crashes, the RBI was requested to establish and monitor a deposit insurance system. It should restore the trust in the national bank system and was initialized on December 7, 1961. The Indian government founded funds to promote the economy and used the slogan "Developing Banking." The Government of India restructured the national bank market and nationalised a lot of institutes. As a result, the RBI had to play the central part of control and support of this public banking sector. 1969–1985. In 1969, the Indira Gandhi-headed government nationalised 14 major commercial banks. Upon Gandhi's return to power in 1980, a further 6 banks were nationalised. The regulation of the economy and especially the financial sector was reinforced by the Government of India in the 1970s and 1980s. The central bank became the central player and increased its policies for a lot of tasks like interests, reserve ratio and visible deposits. These measures aimed at better economic development and had a huge effect on the company policy of the institutes. The banks lent money in selected sectors, like agribusiness and small trade companies. The branch was forced to establish 2 new offices in the country for every newly established office in a town. The oil crises in 1973 resulted in increasing inflation, and the RBI restricted monetary policy to reduce the effects. 1985–1991, a lot of committees analysed the Indian economy between 1985 and 1991. Their results had an effect on the RBI. The Board for Industrial and Financial Reconstruction, the Indira Gandhi Institute of Development Research and the Security and Exchange Board of India investigated the national economy as a whole, and the Security and Exchange Board proposed better methods for more effective markets and the protection of investor interests. The Indian financial market was a leading example for so-called financial repression. The Discount and Finance House of India began its operations on the monetary markets in April 1988. The National Housing Bank, founded in July 1988, was forced to invest in the property market, and a new financial law improved the versatility of direct deposit by more security measures and liberalisation. 1991–2000, the national economy came down in July 1991 and the Indian Rupee was devalued. The currency lost 18% relative to the US dollar, and the Narasimham Committee advised restructuring the financial sector by a temporal reduced reserve ratio as well as the statutory liquidity ratio. New guidelines were published in 1993 to establish a private banking sector. This turning point should reinforce the market and was often called neoliberal. The central bank deregulated bank interests and some sectors of the financial market like the trust and property markets. This first phase was a success, and the central government forced a diversity liberalisation to diversify owner structures in 1998. The National Stock Exchange of India took the trade on in June 1994, and the RBI allowed nationalised banks in July to interact with the capital market to reinforce their capital base. The central bank founded a subsidiary company the Bharatiya Reserve Bank Note Mudran Limited in February 1995 to produce banknotes. Since 2000, the Foreign Exchange Management Act from 1999 came into force in June 2000. It should improve the item in 2004 2005. The Security Printing and Minting Corporation of India Limited, a merger of 9 institutions, was founded in 2006 and produces banknotes and coins. The national economy's growth rate came down to 5.8% in the last quarter of 2008–2009, and the central bank promotes the economic development. Structure. Central Board of Directors. The Central Board of Directors is the main committee of the central bank. The Government of India appoints the directors for a 4-year term. The board consists of a governor, and not more than 4 deputy governors, 15 directors to represent the regional boards, 2 from the Ministry of Finance and 10 other directors from various fields. Governors. The current governor of RBI is Raghuram Rajan. There are 3 deputy governors, Deputy Governor H.R. Khan, Dr. Urjit Patel and A. Gandhi. Dr. Urjit Patel became deputy governor in January 2013. 2 of the deputy governors are traditionally from RBI ranks, and are selected from the bank's executive directors. As for the rest, 1 is nominated from among the chairpersons of public sector bank, and the other is an economist of repute. Supportive bodies. The Reserve Bank of India has 4 regional representations, north in New Delhi, south in Chennai, east in Kolkata and west in Mumbai. The representations are formed by 5 members, appointed for 4 years by the central government and serve beside the advice of the Central Board of Directors as a forum for regional banks and to deal with delegated tasks from the Central Board. The institution has 22 regional offices. The Board of Financial Supervision, formed in November 1994, serves as a CCBD committee to control the financial institutions. It has 4 members, appointed for 2 years, and takes measures to strengthen the role of statutory auditors in the financial sector, external monitoring and internal controlling systems. The Tarapur Committee was set up by the Reserve Bank of India under the chairmanship of former RBI Deputy Governor S. S. Tarapur to lay the roadmap to capital account convertibility. The five-member committee recommended a 3-year timeframe for complete convertibility by 1999 Euro 2000. On July 1, 2007, in an attempt to enhance the quality of customer service and strengthen the grievance redressal mechanism, the Reserve Bank of India created a new customer service department. Offices and branches. The Reserve Bank of India has 4 zonal offices. It has 19 regional offices at most state capitals and at a few major cities in India. Few of them are located in Ahmedabad, Bangalore, Bhopal, Bhubaneswar, Chandigarh, Chennai, Delhi, Guwahati, Hyderabad, Jaipur, Jammu, Kanpur, Kolkata, Lucknow, Mumbai, Nagpur, Patna, and Thiruvananthapuram. It also has 9 sub-offices located in Agartala, Dehradun, Gangtok, Kochi, Panaji, Raipur, Ranchi, Shillong, Shimla and Srinagar. The bank has also 2 training colleges for its officers, viz. Reserve Bank Staff College at Chennai and College of Agricultural Banking at Pune. There are also 4 zonal training centres at Mumbai, Chennai, Kolkata and New Delhi. Main functions. Bank of Issue. Under Section 22 of the Reserve Bank of India Act 1934, the bank has the sole right to issue bank notes of all denominations, except 1 rupee notes and coins, which were issued by the Ministry of Finance, and now is stopped from being issued. The distribution of 1 rupee notes and coins and small coins all over the country is undertaken by the Reserve Bank as agent of the government. The Reserve Bank has a separate issue department which is entrusted with the issue of currency notes. The assets and the liabilities of the issue department are kept separate from those of the banking department. Monetary authority. The Reserve Bank of India is the main monetary authority of the country, and beside that the Central Bank acts as the bank of the national and state governments. It formulates, implements and monitors the monetary policy as well as it has to ensure an adequate flow of credit to productive sectors. Regulator and supervisor of the financial system. The institution is also the regulator and supervisor of the financial system and prescribes broad parameters of banking operations within which the country's banking and financial system functions. Its objectives are to maintain public confidence in the system, protect depositors' interest and provide cost-effective banking services to the public. The Banking Ombudsman Scheme has been formulated by the Reserve Bank of India for effective addressing of complaints by bank customers. The RBI controls the monetary supply, monitors economic indicators like the gross domestic product and has to decide the design of the rupee banknotes as well as coins. Managerial of exchange control. The central bank manages to reach the goals of the Foreign Exchange Management Act, 1999. Objective: to facilitate external trade and payment and promote orderly development and maintenance of foreign exchange markets in India. Issuer of currency. The bank issues and exchanges or destroys currency notes and coins that are not fit for circulation. The objectives are giving the public adequate subs of RBI to issue bank notes, to maintain the currency and credit system of the country to utilize it in its best advantage, and to maintain the reserves. RBI maintains the economic structure of the country so that it can achieve the objective of price stability as well as economic development, because both objectives are diverse in themselves. For printing of notes, the Security Printing and Minting Corporation of India Limited, a wholly owned company of the Government of India, has set up printing presses at Nashik, Maharashtra and Awaz, Madhya Pradesh. The Bharatiya Reserve Bank Note Mudran Private Limited, a wholly owned subsidiary of the Reserve Bank, also has set up printing presses at Mysore in Karnataka and Salboni in West Bengal. In all, there are 4 printing presses. And for minting of coins, SPMCIL has 4 mints at Mumbai, Noida, Kolkata and Hyderabad for coin production. Banker of banks. RBI also works as a central bank where commercial banks are account holders and can deposit money. RBI maintains banking accounts of all scheduled banks. Commercial banks create credit. It is the duty of the RBI to control the credit through the CRR, bank rate and open market operations. As Bankers Bank, the RBI facilitates the clearing of checks between the commercial banks and helps interbank transfer of funds. It can grant financial accommodation to scheduled banks. It acts as the lender of the last resort by providing emergency advances to the banks. It supervises the functioning of the commercial banks and take action against it if need arises. RBI. Detection of fake currency. In order to curb the fake currency menace, RBI has launched a website to raise awareness among masses about fake notes in the market. www.paysabolte-hi RBI organ provides information about identifying fake currency. On January 22, 2014, RBI gave a press release stating that after March 31, 2014, it will completely withdraw from circulation all banknotes issued prior to 2005. From April 1, 2014, the public will be required to approach banks for exchanging these notes. Banks will provide exchange facility for these notes until further communication. The Reserve Bank has also clarified that the notes issued before 2005 will continue to be legal tender. This would mean that banks are required to exchange the notes for their customers as well as for non-customers. From July 1, 2014, however, to exchange more than 10 pieces of 501,000 notes, non-customers will have to furnish proof of identity and residence to the bank branch in which he wants to exchange the notes. This move from the Reserve Bank is expected to unearth black money held in cash. As the new currency notes have added security features, they would help in curbing the menace of fake currency. 1. Developmental role. The central bank has to perform a wide range of promotional functions to support national objectives and industries. The RBI faces a lot of intersectoral and local inflation-related problems. Some of these problems are results of the dominant part of the public sector. Related functions. The RBI is also a banker to the government and performs merchant banking function for the central and the state governments. It also acts as their banker. The National Housing Bank was established in 1988 to promote private real estate acquisition. The institution maintains banking accounts of all scheduled banks too. RBI on August 7, 2012 said that Indian banking system is resilient enough to face the stress caused by the drought-like situation because of poor monsoon this year. Policy rates and reserve ratios. Bank rate. RBI lends to the commercial banks through its discount window to help the banks meet depository Euro unregistered trademark S demands and reserve requirements for long term. The interest rate the RBI charges the banks for this purpose is called bank rate. If the RBI wants to increase the liquidity and money supply in the market, it will decrease the bank rate, and if RBI wants to reduce the liquidity and money supply in the system, it will increase the bank rate. The bank rate has lost its significance as a monetary policy tool as the central bank presently signals stance through changes in repo, the rate at which banks borrow short-term funds from RBI. The bank rate, which is the standard rate at which the RBI buys or rediscount bills of exchange or other commercial paper, is presently used as a penal rate which the banks have to pay for their failure to meet the mandatory cash reserve ratio. As of 29 Jan. 2014, the bank rate was 9.00%. Reserve requirement cash reserve ratio. Every commercial bank has to keep certain minimum cash reserves with RBI. Consequent upon amendment to subsection 42(1), the Reserve Bank, having regard to the needs of securing the monetary stability in the country, RBI can prescribe cash reserve ratio for scheduled banks without any floor rate or ceiling rate. Before the enactment of this amendment, in terms of section 42(1) of the RBI Act, the Reserve Bank could prescribe CRF for scheduled banks between 5% and 20% of total of their demand and time liabilities. RBI uses this tool to increase or decrease the reserve requirement depending on whether it wants to effect a decrease or an increase in the money supply. An increase in cash reserve ratio will make it mandatory on the part of the banks to hold a large proportion of their deposits in the form of deposits with the RBI. This will reduce the size of their deposits and they will lend less. This will in turn decrease the money supply. The current rate is 4.00% minus 25 basis points cut in cash reserve ratio, CRR, on September 17, 2012. It will release Rs 17,000 crore into the system market. The RBI lowered the CRR by 25 basis points to 4.25% on October 30, 2012. a move it said would inject about 175 billion rupees into the banking system in order to preempt potentially tightening liquidity. The latest CRR is 4%, statutory liquidity ratio. Apart from the CRR, banks are required to maintain liquid assets in the form of gold, cash and approved securities. Higher liquidity ratio forces commercial banks to maintain a larger proportion of their resources in liquid form and thus reduces their capacity to grant loans and advances, thus it is an anti-inflationary impact. A higher liquidity ratio diverts the bank funds from loans and advances to investment in government and approved securities. The latest SLR is on 14/13 is 22.50% in well-developed economies. Central banks use open market operations euro buying and selling of eligible securities by central bank in the money market euro to influence the volume of cash reserves with commercial banks and thus influence the volume of loans and advances they can make to the commercial and industrial sectors. In the open money market, government securities are traded at market-related rates of interest. The RBI is resorting more to open market operations in the more recent years. Generally RBI uses three kinds of selective credit controls: minimum margins for lending against specific securities, ceiling on the amounts of credit for certain purposes, discriminatory rate of interest charged on certain types of advances. Direct credit controls in India are of three types: part of the interest rate structure that is on small savings and provident funds, are administratively set. Banks are mandatorily required to keep 23% of their deposits in the form of government securities. Banks are required to lend to the priority sectors to the extent of 40% of their advances. Publications: a report titled Trend and Progress of Banking in India is published annually, as required by the Banking Regulation Act of 1949. The report sums up trends and developments throughout the financial sector. Starting in April 2014, the Reserve Bank of India is sending out bi-monthly policy updates. Further reading: S. Allen Sima. History of the Reserve Bank of India, Volume 1, 1935 euro 1951. RBI. 1970. ISBN 81-7596-247-X, G. Balachandran. The Reserve Bank of India, 1951 euro 1967. Oxford University Press. 1998. ISBN 0-19-564468-9. A. Vasudevan A.L. The Reserve Bank of India, Volume 3, 1967 euro 1981. RBI. 2005. ISBN 81-7596-299-2. Cecil Kish, Review the Monetary Policy of the Reserve Bank of India by K. N. Raj. In The Economic Journal. Volume 59, Number 235, pp. 436 euro 438. Finlay G. Shiraz, The Reserve Bank of India. In The Economic Journal. Volume 44. Number 174, ppA 258 euro 274. Narendra Jadhav, Partha Ray, Triti Ut Bose, Indranil Senator Gupta, The Reserve Bank of India euro unregistered trademark S balance sheet, Analytics and Dynamics of Evolution, November 2004. Notes. References. External links, Official website, Reserve Bank of India Ombudsman site, Weekly Statistical Supplement.